Right, so I want to make sure that all our students nail debits and credits. It is fundamental to everything. So I think I've stressed how important it is. Let's move on. All right, this is what, if you just want your tutor, you will hear this every time. For every debit, there is a credit. Never, ever, ever enter a transaction where your debits don't match your credits. When I see that, I think, benefit of the doubt, not a chance. If your debits don't match your credits, you're wrong. Debits go on the left. That's your left, I think. And credits go on the right. That's just the way it is. I'm not going to explain that. It's just you've got to choose some sort of standard way of doing it. And that's the way we do it. When you first start out, Alan likes to say debits are receiving and credits are giving. So if you buy something, it's a purchase, it's a debit in the purchase account because you're receiving goods. If someone pays you money, it's a debit in the bank account because you're receiving money. If you sell something to someone, it's a credit, it's a sale because you're giving something away, so that's a credit. Whereas if you pay money out of the bank account, it's a credit. It's one way of thinking about it, and it helps when you start out, but I wouldn't rely on that. Eventually, and I swear to God, it will become second nature, and you will start thinking like a sad accountant. It will just click. I know it sounds cheesy, and I'll say, oh no, you're struggling, but keep going at it. It will click. It will click. It'll be a time where you just think, you cannot remember a time where you didn't really understand it. You just do it, and then you worry because you're an accountant. Right. So this is I really am going back to basics, but it doesn't do anyone any harm. So moving on. PEARLS. It's an acronym. Basically, if you start off this way, it will help you get your debits and credits right. So debits are the PEA of PEARLS. Purchases, so that is stuff you buy to make your sales. So if you make tables, I always use tables as an example, you buy wood. That's a direct expense, it's a purchase, so that is a debit. Expenses, these are cost to your business, but more overhead things, like rent for your table factory. That is a debit. And assets. Assets are things that you own that are worth something. So these are things like your fixed assets. These are your factory. So anything that's going to stick around for a couple of years is an asset, is a debit. Your current assets. So if someone owes you money, like a sales invoice, that's a debit. If you've got money in the bank account, that's an asset. It's worth something. It's a debit. And then there are other such debits as prepayments. You'll come to at level 3. But basically, they are your debits, your purchases, your expense, your assets. PEA of PEARLS. If you've only got any queries or any questions, just say in the chat box. But I'll take the fact that everyone's got their debits right, then we'll move on. So let's go to credits. These are your RLS of PEARLS, which are receipts, liabilities, and sales. So receipts, these are when you receive money that's not a sale. So like bank interest, if you receive bank interest, that is a credit. If you charge someone rent, you receive rent, that is a credit. Liabilities, this is where you owe people money. So it can be you owe your suppliers money. That's a credit. If you owe the bank money with a bank loan, it's a credit. If your bank goes overdrawn, as we all do, especially this time of the month, it's a credit. And sales are a credit. I want to go back to the bank, because the bank causes all revenue. Revenue receipts. I mean, the reason why I don't use revenue, because it sort of gets confused with sales. Revenue is like, you can see it in accounts as revenue. It's, I want to say receipts is other thing other than sales, because you can, sales is sort of a special thing, because everyone wants to make sales, but you do get other things. I mean, it is just an acronym. There are other ones, DED, click. So DED, D stands for debits, and click stands for your credits. I don't like that one. I've got a student that likes it and has done really well with it. Everyone's different. But you will actually get a feel for this, and it'll just be second nature. But with the bank account, I want to go back to that, is when you see your bank account, you get a bank statement. It says you're in credit. That's a good thing. You've just been paid. You can go out. But in an accounting terms, credit means you're overdrawn. What that means is from the bank's point of view. If you're in credit, the bank owes you money. So the bank has a liability. That's why it's a credit. Whereas if you get this time of month, you've been out too much, you've got your bank account is a in the accounting terms, it'd be a debit. Well, on the bank statement, it'd be a debit. You're overdrawn. But the reason why it's a debit is because it's an asset, money that will be paid. The reason why, we'll come to this later, but anyway, we'll do it now. If you receive money, like you receive rent, you've got to have a credit, and for every debit. So if you receive money, you've got a debit in the bank account. So, you know, your money is going up. So it's got to be the other side, is a credit. So if you receive interest, you debit the bank account because you've got money, and you credit interest because you received money. It's crucial. So, you know, the actual money coming in, you know, you've got to recognise that, but you've got to recognise the fact you've got an asset. And there is no such thing as a stupid question, especially when it comes to debit and credit, because you do not want to get it wrong. So, cool. Right, but the bank account, so the bank says your DR, you're overdrawn, you've gone out too much. But the reason why it says DR is because from the bank's point of view, if you're overdrawn, you owe the bank money. That is an asset to the bank. That's why it's a DR, because it's from the bank's point of view. Whereas if you're in credit, you've got money there, the bank owes you money, so it's a liability to the bank. So that's your pearls. There are other acronyms like DEDCLIC. I'll get rid of them because I want you to use them initially, but, because there's your one, you get it right, but it will become second nature, and you just feel like, you know, increase an asset, that's a debit. Reduce liability, that's a debit. It will just come naturally, I promise you. But it only comes with practice, so we're going to do some practice. So, moving on. Credit sales, this is sort of the initial things. When you do your first journals, is you're going to bring in the sales. And you'll do this in your very first transaction, which is PB1, or BA11 if you've been with us for a while. These are figures taken from the sales daybook. So this records the sales you made, the VAT on the sales, and the fact that someone owes you money. So, we debit the sales ledger control. And when you enter transactions, you normally do debits first. It's just the conformity. Don't ask me why, it's just you do. Debits first. So you debit the sales ledger control because you've got an asset. Someone owes you money. And for every debit, you've got to have a credit. So you credit sales. And you credit sales because it's a sale. You've got to recognize that sale. And you credit VAT because you've got a liability. When you charge someone VAT, it's not money you're going to keep. It's got to go to HMRC, so you owe HMRC that money. So for example, if you made a sale to a customer for £50 plus VAT, 20% of 50 is 10, so you would debit the sales ledger control, the asset, with £60, because that's what they owe you. You're then going to credit sales with £50, because that's the sale you've made, and would credit VAT with £10, because that's your liability. So, let's go on and have a go at this. So, question 1. You issue a sales invoice to Emma for £200 plus £40 VAT. What would be the double entry? Do you debit the sales ledger control with 200, debit VAT with 40 and credit sales with 240, debit the sales ledger control with 240 is an asset, credit VAT with 40 is a liability, credit sales 200, or debit sales with 200, debit VAT with 40 because it's an asset, or credit the SLC with 240 because that's a liability? Brilliant. Things like that cheer me up. Did this a couple of weeks back and everyone got the easy question wrong. Really worrying. But here, no, this is right. Everyone's got it right. We will debit the sales ledger control with £240 because we've got an asset. Emma Limited owes us £240. That's what they're physically going to pay us. It's not all ours because £40 is HMRC. So we only owe HMRC £40, so we credit VAT because that's a liability. And then we're going to credit sales with £200 to recognise that sale. Cool. I'll take the fact that 16 people got that all right and no one got it wrong, as we know what we're doing, and we'll move on. So we'll take it a bit further. And the next slide is credit receipts. This is money when we receive from our credit customers. So it's taken from the cash book. So there's two columns in the cash book. One will say total, and that's the amount that actually goes in the bank account. And one will say SLC, and that's the amount we're going to post to the sales ledger control. So when someone pays us, two things happen. We've got more money, which is a good thing. So we're going to debit the bank. So we're going to increase an asset. But we're going to credit the sales ledger control. The sales ledger control is an asset, but it's going to be a credit. And the reason why it's a credit is because originally we would have debited it to bring in an asset, but we're going to credit it to remove, or well, in this case, if you've got more than one invoice, we'll reduce that asset. So credit reduces an asset. So we debit the bank to show we've got more money, and we credit the sales ledger control to show the fact that people don't owe us quite so much. Any questions on that? Fairly straightforward. One thing I do want to stress, and I do see it quite a lot when people first start out, when people pay you, you debit the bank because people owe you money. Well, people have paid you money, and you credit sales ledger control because people don't owe you money. There is no sales element, there is no VAT element on receipts from a credit customer, because you've already recorded them when you posted the original invoice. You only need to record the sales and VAT element on a cash sale. So, as we've got no questions, let's go to question 2. Let's have a go at this. You receive a cheque from a credit customer for £120. What will be the double entry? Do we debit the SLC with £120, credit the bank with £120, debit the bank with £120, credit the SLC? Do we debit the bank with 100, recognise the sale of 100, and we owe £20 of VAT? Or do we debit the VAT with £20, debit sales with 100, that's blatantly going to be the wrong one, this one, credit SLC with 120? Now we're starting to separate a few people. I've only got 20 people, will it be longer? I've got a few more people get it right, and a few more people get it wrong. But we'll take it from there that it is fairly conclusive. We will debit the bank with £120 because we've got more money. We'll credit the SLC with £120 because they don't owe us £120 anymore. Recognise the sale in the third one is wrong because we've already recognised it when we enter the invoice. And the first one is wrong because if debiting the SLC is increasing how much they owe us, and they're going to be particularly cheesed off if they give us money and we now say they owe us even more. And credit the bank, because crediting the bank will actually reduce the amount of money you've got, but you've actually got more. But that was fairly conclusive, so we'll move on. If I have any queries or you want me to slow down, just say in the chat box. But we'll carry on. Right, the next one, we want to take it a bit further, but on the other side. It's theoretically, it's not any harder, but it's just got the other way around. Credit purchases. Businesses normally work on credits. You'll see a lot of credit sales, you see a lot of credit purchases. The credit purchase is taken from the purchase day book. And from your purchase day book, you'll get 3 things. The amount of money you owe your suppliers, the amount of VAT on the invoices, and the amount of purchases that you've made. Your purchase day book can also include things that, other than the direct expensive purchase, you can also include other expenses in there, and you'll have it on a separate column. But the total amount will still be the same because that is what you owe your suppliers. So in this scenario, we're going to debit purchases because that is a purchase. We've made that purchase, we've bought these goods, so we need to debit the purchases. And we're going to debit VAT. It depends on the business. VAT can be an asset or it can be a liability. But either way, with a purchase, you debit VAT because you're either increasing an asset in the fact HMRC owes you money, or you're debiting a liability and you're reducing the amount that you owe HMRC. So you're either increasing an asset or decreasing liability. Either way, you debit VAT. And then you credit purchases with the gross amount, because that's the amount you owe your suppliers. So if you had, say you received an invoice for £48, you would debit purchases, or if it was say water's not VAT, say it was for stationery. It was £40 plus £8 VAT. You would debit the stationery account. You would debit with £40, debit VAT with £8 because you're going to claim that £8 back on the purchase, and credit the purchase ledger control with £48 because you owe your supplier £48. So let's make you work. Let's go to question 3. Similar sort of thing. You receive an invoice for electricity of £500 plus £100 VAT. What will be the double entry? You're going to debit electricity of 500, debit VAT of 100, credit PLC of 600. Debit the PLC of 600, credit electricity of 500, and credit VAT of 100. Debit electricity of 500, credit VAT of 100, and credit PLC. And I'm sure you can all read the last one, credit electricity of 500, credit VAT, and debit PLC 600. One person. Right. The first one's right because we're going to debit the electricity account because we've got an expense. We've got to recognise that expense. We've used £500 of electricity. We're going to debit the VAT account of £100 because we're going to claim that VAT back. But we owe the electricity company the money. We've not paid it yet. So we've recognised the expense. We've recognised the VAT we're going to claim back. We've got to recognise the liability. So we're going to credit the purchase ledger control. And the fact that we got 13 to 1 makes you think it's fairly conclusive. So let's move on. Now I've got someone asking a question. The thing is, you do the same things again and again and again, so it will come with practice. You always, with your sales day book figures, always debit the sales ledger control, always credit sales, always credit the VAT account. With your sales returns day book, which offsets it, you will credit the sales ledger control because you're not owing them so much. You'll debit the sales returns account, and you'll debit you. Yes, if a business is registered for VAT, otherwise you'd like myself. I get charged VAT on my electricity, and I don't do accounts for myself, but I would recognise it as an expense because I can't claim that £100 back. It's an expense as the VAT if you're not VAT registered. If you can claim it back, it's an asset or reduction in liability. In your exam, they can only test you. The exam is only 2 hours long in the PB and CJ thing, so they can only ask you so many questions. So if they're testing double entry, they're not going to have one where they're not VAT registered, because then they've got to have one where they are. So in the exam, they are going to be VAT registered because you're testing 2 things at once, because there's a million things in the exam they want to cover. And to have a non-VAT registered business means they are missing an opportunity to test, can you do double entry on VAT as well as the expense? Because then they have to have 2 questions to test that, because they've got to cover what they call learning outcomes. And in the exam, if they aren't VAT registered, they will tell you, because it is generally the case that most businesses, if they've got a turnover of £70,000, they are VAT registered, or have to be VAT registered. But it could be the case that you are not VAT registered. And so you're right, Rebecca, the expense would be the full £600, and the liability will still be £600. You can't claim that VAT back, it's an expense. But yeah, in the exam, they are going to be VAT registered. I see Tiffany's typing a question. Rebecca's typing a question. Cool. Yeah, but don't worry. Yeah, well, do worry about it. But you've got to get it. You know, that's it. But it will be VAT registered. Mark my words. If you see a question, you have to do enter from the sales day or purchase day book. I'll buy a pint if it's wrong. Really. If the purchase was posted with a cash book and this was a cash purchase, I'm right in saying it was not going to PLC. That is right. What it would do, if it was a cash purchase, no, well, let's say cash purchase, say you paid it out of your bank account with your switch card. The double entry would be, we'll go and stick with our electricity, we'd credit the bank with £600, because that's what's physically happened. We physically paid £600 out of the bank account, and we'd debit the electricity account with 500, we'd debit the VAT with 100, we're claiming it back. At no point did we owe money. Because they're not giving you an invoice and you've not owed it and then you've paid it off. It's like you've walked in off the street, decided, I want some electricity, here's my card, take it out my bank, I've got it straight away. So if it's a cash purchase, when I say cash, I mean it's gone to the bank account, not petty cash. Cash is in paid straight away. It would just go debit electricity, debit VAT, credit bank, because don't touch the PLC because you've never ever owed that amount of money. Same with cash sales. Debit the bank account because you've suddenly got this money and you've suddenly got a sale, so credit sales and credit VATs, you've got VAT liability, but it goes in the bank. It's never been owed, so just debit the bank, not the SLC. Does that answer your question, Tiffany? In the exam, you will have credit payments to your suppliers and cash purchases in the same cash book, so you'll need to know. And likewise, in your sales day book, you'll have cash sales and credit sales. So you need to know what to do with both. So moving on, supplier payments taken from the cash book. These are exactly the same as a customer receipt, but the other way around. So you're going to get 2 things when you pay a supplier. You haven't got as much money left, so that's gone, and you don't owe someone some money, so that's a good thing. If you owe people money, it's a liability. So to reduce liability, because you're not going to pay them again, you debit it. So you debit the liability, so you debit the purchase ledger control, so you don't owe them as much, but you've lost the money. So you credit the bank, so because you've got less money. So here, we don't touch purchases and we don't touch VAT. They've already been recorded when the invoice was posted. All we're doing now is recording the fact that we've now got less money, but we don't owe so much. Has anyone got a question on that? I'll take the fact that no one's typing as a yes, and we'll do a question on this. So, you pay a supplier £840, and this is for an invoice which was £700 plus £140 of VAT. What will be the double entry? Bearing in mind, this is an invoice that we've had on credit. We're just paying them. What will we do? I know you can't see this, but I can see this, and this is until people start changing their answers, a bit more controversial. Right, I know we're pressed for time, so we'll end it there. Right, what we're going to do here, we're going to debit the PLC, because we don't owe our supplier £840 anymore. We've given them the money, so that will keep them quiet. And we're going to credit the bank, because we now no longer have £840. We don't recognise the repair and VAT, because we've already done that with the invoice. To do it again is just double it up. So although you're having two expenses, which would be good for tax purposes, and you're also claiming £140 of VAT back, again, HMRC wouldn't like that. And you're crediting the PLC. That one there is actually making your liability bigger. So it wouldn't be that. What it is you've got to recognise the fact you don't owe so much, so we're debiting a liability, and recognise the fact we haven't got so much money in a bank account. Pretend we have money in a bank account, that's an asset. We're crediting it, so we're reducing an asset. So Rebecca's typing. But is everyone fairly clear with that? These things here, you will have to do in your exam. There's no way in a PB and CJ exam these things are not going to come up. It is crucial. There's some things in there that might be a bit tricky. Journals, which we did a lecture on last week, I believe, they're tricky. If you don't get them quite right, you can pass the exam. Get these wrong, you'll fail your exam. There's no two ways about it. So, let's go a bit further. It is something that is absolutely crucial for debits and credits. I mean, it's just fundamental to all things. I mean, we can take it further. Say, for example, you bought an asset. Money goes out of the bank account. That's a credit, but you're going to debit your fixed assets. It all works exactly the same way. For every credit, there's got to be a debit. But you've got to think, what is it? Is it a purchase, expense? Is it an asset? In which case, do I want to increase it, which is a debit, or want to decrease it, is a credit? Or is it a receipt, liability, or sale? Do I want to increase it, in which case it's a credit, or I want to decrease it, in which it's a debit? It is a bit, initially daunting, and you do think, what on earth is going on? But you will sort of cover this. I swear to God, you will get to know it. We're going to what we're doing is recording this as we speak, and we're going to put it on the My PTA account. We actually are doing a webinar with the AAT. The AAT are letting us on their system, and we've promised not to do anything too horrendous. So we're going to get that right. But we reckon by tomorrow afternoon, these will all be live. Oh, well, obviously not live. But these will all be up there, and you can access them, and they'll be up there forever. So you can access the PowerPoint slides as well. So you can always sort of use them again. And obviously, they're going to go on YouTube and everywhere. So you can always access them again. It's something really, really to get right is your debits and credits. But is there any questions on debits and credits? Because it is crucial. And every time you get it right, that's one less bad assignment I need to mark. Is there one for journal entries? Yes, we did one on journal. It's up there, isn't it? It's in level 2 and level 3. So if you're level 4 student, we can put it there anyway, I suppose. Whatever. So yeah, there is one on journal entries. It's quite a long one. I plan on these to be about 20 minutes. I think I'm about 50 minutes. I get excited with journals, as you can. So it is quite long, but it is up there. And journals are crucial. It is something that students struggle with at level 2. So it's in the exam. And at level 3, they just do it again. They don't make it any harder because it's just hard enough as it is at level 2. So there's one, so it comes in at level 3. Journals are crucial, but they won't mean you'll fail your exam at level 2. Because with level 2, you've got to know your debits and credits, and the ones that you need to know all the time, you debit this, you credit that. If you can't get them right, you'll fail your exam. Journals, you need to think a bit more on your feet, thinking, what was it? Was it debit? What do I need to do to get it right? Do I credit it? Do I debit again to get it bigger? No, so that the risk journal was on there. But these are always coming on my PTA. We always try and do them every Thursday. But if you have any queries, if you have any questions, want any requests, let us know. So this is something we want. So if you've got any sort of feedback, let us know. Does anyone have any more questions on debits and credits? Because it is crucial. There is no end to my talents, honest to God. When you work as a chartered accountant, it's one of the things you learn. Along with money market hedging and foreign exchange transactions, you learn how to type with your feet. It's a skill all accountants should have. That's another one I promise by level 4 you'll know. Anyway, right, moving on before I get sacked for being stupid. I'm not going to say what I was going to say. Right, unless anyone's got any more questions that are not going to land me in trouble, I'm going to let you go. I see Rebecca's typing. Yeah, strangely. Well, after my webinar with the AAT tomorrow, things might change. I get told off me a bit excitable. Cool. Right. I am going to go. I'm going to go home. I've got an hour's drive. I've been doing this all day. Cool. But honestly, if you've got any sort of feedback, if you think I get excited, I'll talk too fast, let me know. If you think they're rubbish and you're wasting my time, let me know. If you think we should do more of them so I don't have to mark as many ICAST things, let me know. Let us know at info@premiertraining.co.uk. Carrie picks them up, so I love going in there and see Carrie getting loads of my emails on my behalf. But yeah, cool. I'm going to go. If you have any queries or any questions, let us know. That's what we're here for. Always bring your tutor. That's what we're here for. So that's what you're paying money for as well. So cool. I am going to go home. I hope you enjoyed it. I hope you got something out of it. And I hope you know your debits and credits, because I wouldn't want to accuse you of not. Cool. Right. I will see you all later. I will do this again next week. I haven't decided what it's going to be on.